The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 18th magnificent Monday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, let those fingers do the walking. Go ahead and send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. Of course, inside the Tiger's Den. Any ping will do. So let's go ahead and get this show started on magnificent, magical, marvelous Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading down 149 points, 24,941 is the print. S&P is off 10, 2770. NASDAQ 100 off 14 points, about 0.2% to the downside. No big deal. Russell 2000 slightly green. Semis are off 1 2/3%, down 17 point. Trannies are up 33. Spot volatility index up 6% so far. That's 71 pennies. 1268 is the print. Gold's up $2. Silver is flat. Lights we crude up a quarter lead. The charge, the upside, it is China Biologic Products, 1770. I don't know, every time I say the word biologic, it reminds me of that movie. What was it? Periscope, up, Periscope, down, down, Periscope, something like that. Kelsey Grammer. They were chasing the biologics. In any event, Google is also to the upside, $16. Fleet Core Technologies up 12. Tesla up 11. PTC Therapeutics up nearly $11 as well. To the downside, leading the charge, it's Biogen, BIIB. For some reason, I like saying that as well. That's down 15 bucks or 5%. CBIO, Catalyst Bioscience, down $14 and change, 58%. That is taking it in the shorts. Mercado Libre off $10. Arista Networks down 8. Baidu off 6. So we certainly have things to look at. I want to look at what you want to look at. The first question came in. We got two that came in by email. We'll get to those first. First was if I could ascertain what the equity futures markets are doing. You know, that's one of my favorite things to do. And the question was, where's the most important message coming? And what I'd have to say, and there's a number of different places we could start. I'm going to start with the easiest one, I think, to follow out here, and that's going to be by taking a look at the 4-hour time frame, 240-minute time frame chart. Now, this is take a look at the market breadth, utilizing the TAS system out here. So when we take a look, and I mentioned to you TAS market profiles, we have these levels of support and resistance that exist in basically inside anything. When prices above resistance, the top of a box, and it's kind of like driving down an expressway, you're free to go, there's no traffic. When you're below the box, free traffic, no traffic, you're free to go, but that's to the downside. One to the upside, one to the downside. In between, you're in a range, consolidating range, and you and I have the ability to take a look at each box and determine whether there's buyers or sellers that are in control of that range. Here, this takes a look at the entire group of stocks constituents that make up the S&P 500, determines how many of them on a 4-hour basis are traded above the top of the box versus the bottom of the box. That, by the way, at the moment, 137 above, 194 below. So what we would have would be, if you take a look at the red and green line, the green representing the bullish side or above the top, the red below. And so what we had is a bearish crossover. So that's one of the first place start. Now, on a daily time frame, I'll just switch to daily. No bearish crossover. We do on the 60-minute time frame. So on the two shorter term time frames, you've got that little bearish crossover. Now, you have it inside the S&P 500. You also have it inside the NDX 100. You wouldn't necessarily know with the NDX being off only 11 points, but as we take a look at market breadth out here, and this just took place at 8 o'clock this morning. Ever so slight because it's 29 issues where price is trading above the top and 35 where price is trading below the bottom out there. So to answer your question, that came from Bob. Bob, I think that what I would share with you, because I can visually, we're all visual, or most of us are visual, is just start there, right? So we've got some bearish market breadth on the 240. So what are those 240-minute time frame charts doing? Let's start here by taking a look at the NQ. We take a look at the September contract for the NQ, makes one of your favorite topping and bottoming signals. In this case here, it was the topping signal that actually took place at 6 o'clock on June the 15th. You can see that price was trading within it's a 240-minute chart within its 240-minute profile. Right here on the trading session of 2,200 hours, that is on the 17th. That was last night. So 2,200 hours is going to be 10 o'clock. At 10 o'clock, you had price crush through, which was a bullish structured box out here. The center line, if you can see it, it's the blue dash line closer to the bottom, means that buyers should have been able to hold price above the bottom of the box. They did not. Price goes ahead and moves lower into a prior swing point. That was prior swing point on a 240-minute chart, 100% move down to the June 14th level. And then since then has been bouncing. Now it formed a hammer candle. So, Bob, I think that the low that came in on this 4-hour chart, this was at 10 o'clock this morning. That's where we saw the lows of the morning thus far. Well, the morning, it's afternoon. So the lows of the morning, you had a hammer candle. That says the bottom of that hammer is going to be muy importante. That level 7208, 75 out there. If you see a close below that, which arguably market breadth wise is saying we should, prices testing Stevie's red line, that so far is held, would say you're going to go down, test the hammer candle. If you close below it, then you likely have an A to B equals CD to the downside. At this stage here, no guarantee which way it's going to work out, but so far what you have is resistance that's holding. The key is we also know on a 4-hour basis where the support is. It is at the lows of the morning. What is it going to be if it's an A to B equals CD to the downside? We don't know just yet, but it could look like something like this. Actually, I think this was the high. And so assuming that the session we're in right now is the C point of the A to B equals CD, no guarantee about that. You're looking at about 71.68. That's the 1-to-1, 71.37, the 1-1.272. So how do I put that together? Well, really look to the downside where support is. It's at this little red dashed line. That price point, it's going to try to give it to you. But to give it to you before we go to the heartbreak, that would be 71.50. 71.50, 75. Right now, it looks like that's where price in the NQ is headed to, which could set up just a Gartley buy pattern. Steve Rhodes will be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we took a look at the NQ, and we were looking at the 4-hour time frame chart. We were looking at market breadths, and so we should finish this off by taking a look at the 4-hour time frame for the ES Mini as well. We can see that it also made the same type of topping signal out here, and it was at the time frame of 6 o'clock. This was on Friday. 6 o'clock in the morning when it broke through the bottom of its 240-minute profile out there, June 15th, you can see. And where price went to, remember I talked, we looked at the red dashed line. That's a time to mark setup level. Great for identifying short-term support or resistance. In this case here, short-term, we'll take a look at a 240-minute chart. And I suggested that that's where price is likely headed to. Now, that's assuming that what you and I just looked at, the market breadth and this top here, that they continue to garner traction. It's competing against strength on the daily time frame chart, but we're just looking at the short term as we speak right now. You can see in the ES Mini that this little red dash line has been tested and rejected several times. The first time was at 2 o'clock in the afternoon on Friday. The next time was at 10 o'clock this morning. Price got down, tested that level. You can see that price has since bounced off of that. You don't need me to tell you that. You already know that if you're listening in on the show. And price has not done, and what is likely to occur here next, different than the NQ, is that you can see that the price oscillator, maybe you can't see it, you're listening in, so I'll share with you the price oscillator, difference between two exponential moving averages, 19 and 39, on a 240-minute basis, is nearing zero. It's at about 1.14 as we speak right now. The phenomena is, as that approaches zero, what happens is there's a slowdown. Now, we've been moving sideways here, and so I don't know that this is going to occur between now and 4 o'clock, or I can't measure the time frame. What I can share with you is what's likely to occur. In order to generate the next message with regard to, on a short-term basis, 240-minute time frame chart, what the markets want to do. So as this approaches zero, what you're looking for is a test of Stevie's red line and price. Well, we're really close to it, or we have been close to it, actually, during this 4-hour session. The last 4-hour session completed at 10. This one completes at 2. So very likely we are to see this. If you see a test, a price test, DB's red line, I'll get it out. Don't worry about that. Just may take some time. And a rejection, meaning price moves lower, than we would have, or this chart would have a falling price oscillator below zero. Then that's bearish. Then price moves lower. I know the question, where would price move to? Well, we don't really have another area, clear area, where price would head to other than coming all the way back into the prior swing point. That swing point takes you back into May 31st, and that is in the 2703 area. I would be looking at other time frame charts to identify that, such as the daily time frame, if that were to come to fruition. And the daily time frame, for example, in the ES Mini would take us to its red dashed line. By the way, the daily has the topping pattern. This was a Gartley sell pattern. It's been confirmed, but price has not closed yet below the bottom of its TAS daily profile. Taking a look at the September contract, that's priced right at about the 2770.50 level. It's been tested on Friday, tested again today. So you're looking, if closed below that, would then set up a price target. Price target I would use would be that little red dashed line. That is the low of June 1st. That is a price level of 2709.50. It's not there yet. You don't have that confirmation. You need to see it close below that TAS market profile on a daily basis. So, Bob, I hope that assists you with regard to what I think is the most important area, time frame, for us to monitor in order to generate the next message inside of the ES Mini. We have another question that came in by email. Then we're going to get to one that came in from the Tiger's Den. The one by email, this was from Scott, I believe. And I see a couple others that have come in, so thanks. And you too can get in line. Steve at TFNN.com. Just put radio show question, radio show inside the email like Scott did. And Scott says, I bought TRXC. TRXC, it's Transcenterix Inc. Oh, that is a mouthful. So you bought it at $349. It's at $399 right now. Bought it for a trade and have a hard stop at $345. Okay. Can you give me your opinion on a good place to exit? Also, your call last week about a market pullback was spot on. Love the show, and when I get back from vacation, I'll be subscribing to the newsletter. Well, thank you. Where are you vacationing? Vacationing and listening to our show here. Hey, vacation. All right, but he's making money. He's paying for the vacation. So as we take a look at this equity, what you would like to see occur today is you would like to see price close above 387. And the reason is because this is a bearish structured box. There's always nothing more bullish than a failed bearish pattern. As we pull price off the chart, you can see how the center line, you'll see three lines here. So the center line is closer to the top than it is the bottom. Sellers should have been able to control the price area between 387 and 362. They have not controlled that level. Price is above that level. It is above a swing point from the trading session of June 1st. Now, that had 10 million shares. You're already at 7.4 million shares. You're taking out a swing point with volume. That being said, you've either got an A to B equals CD to the upside, and the conservative one gives you a price projection, give or take, of about, the one-to-one is 532. Now, what this also has on the left side, and it's incumbent upon you, and I'd always go explore the left side of the chart. The right side we use for projecting. The left side, we start looking for where is there potential problem. The potential problem comes from the trading session of October 17th. Now, it's a high volume high, 136 million shares. When you see high volume highs that have not been tested, says it wants to be tested. That is 5 buckaroonies. So where is this headed? I would say as long as price stays above 387, you're looking at price moving up to the 5 to 532 level. Probably a reasonable reason for you to stay with this trade. That's looking at the daily time frame chart. With regard to the weekly time frame chart out here, again, high volume high, you're in it, you're above profile, so you're not going to likely take out that volume. So the 532 may be a bit of a struggle, because remember, there were a lot of traders. There were a lot of shares that traded hands the week of October 16, 308 million to be specific. And some of those folks, many of those folks, were wondering what the Sam heck kind of decision they made February 5th when this equity got down to a low of $1.27. Can you imagine buying it at 5? It's at $1.27. That's why position sizing is so important out there. So, there may be folks that are just praying to you, whomever, to just get their money back. But it does look pretty good as we speak thus far in getting back into that $5 area. So thanks for listening to us on your vacation. That ticker symbol again was TRXC. Hopefully I got that right. Then there was not necessarily a question, but a statement inside the Tiger's Den regarding silver. So when we get back from this break, we'll go take a look at high-ho silver. I'll go check my email, see what other questions are in. You can get in on the action as well. Hey, callers, go right to the top. 877-927-6648. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So one of our extraordinarily intelligent investor traders in the Tiger's Den wrote the following, so I'll share that with you, which is the silver flush. That was a huge move lower last week. And the seasonal cycle. So we know that we have seasonal cycle patterns that we can pay attention to in metals and the indices and so on. So the silver flush last week and the seasonal cycle low that's anticipated, and with silver's option expiration on June 26th is setting up a nice long in silver. It's a speculation there. That would be next Tuesday. I believe the 26th is next Tuesday based on today's date. Then we'll see how good I am at adding 7+1 out there. So if we take a look at the silver contract, and we look at the 60, the 240, the daily, and the weekly set of time frames for its market profiles, here is what we see. First, and you don't see this that often, but when you do, it does have meaning. On a 60-minute basis, you're probably saying to me, hey, Steve-O, where's that center of the box thing you always talk about? I only see a green line and a red line. You are very observant, and you're exactly right. Every now and then, you'll see the center line will line up with either the top or the bottom, typically the bottom. In that case, you're saying, hey, that's super strong support. Well, price closed below super strong support. That level is 1654. Now, there's a new box on a 60-minute basis that may form over time, and when that new box forms, it provides you with new information. Use the new information. But right now, at 1:31 in the afternoon, we know a strong level of support hasn't worked out. We also know that there was a brand new box that formed on a 240-minute chart, maybe 12 hours ago, 16 hours ago, something like that. And price is trading below the bottom of that box. That bottom of it. Oh, wait a minute. That too. We've got a double, a daily double out here. Alex, I'll take potent potables for 2,000, please. The bottom of its 240-minute profile out there, $16.54, the exact same as the 60-minute, and the center of the box is really right on that. Very interesting. Artie Johnson, he would say that too. So now you're below inside the case is silver. You got to say, be careful out there because it continues to be tested and rejected. That price means 1654. Okay. The daily chart, not the daily double. We just took the daily double. And I'd probably be pretty good at potables. But if we take a look at the bottom of its box, which has been tested and rejected in overnight action, $16.63, that says, okay, price wants to move lower. Hence, we go over and we take a look at the weekly time frame chart, and it formed a brand new profile last week. The bottom of its box is 1620. So I would say to you, Mr. Z, let's say that your speculation is correct. I would go with that speculation. I'd be looking for something in that 1620 type range out there, at least as we speak. So although it wasn't a question, it was a statement, thought I would share that with everybody and at least provide everybody with something to take a look at, perhaps as we come into next Tuesday. Sounds good. Okay, we've got a question here from James, JJ out here. And JJ writes in, I was trying to read it during the break. I only saw the instruments James wanted to look at. Hi, Steve. I'm not in Intel or NVIDIA, but at some point soon would like to start a position in either one or both. This would be for a trade not holding past August. So JJ believes that August is a tough time to be holding NVIDIA or Intel. Well, let's go see. What is it that you and I can find out about Intel and NVIDIA? As we take a look at Intel, having a horrible day out here, 26 million shares coming out of it, passing a B point, a swing point, prior swing point that had 23 million shares. So NVIDIA already has a confirmed A to B equals CD to the downside on its daily time frame chart. Let's go take a look at that price projection for JJ out here. The high being the shooting star, looks like on June the 4th. That's your A point. Your B point looks like down here on June the 12th at about the 54.22. Bounces for 2 days right into the center of that bear structured box out there. And that high on June 14th is 58.86. It's actually, oh, what did I do? I totally screwed up that A to B equals CD. We're going to do it again in the click of a button. And now we've got the C point. So 1-to-1. Folks, 1-to-1. It hit the 1-to-1 today. Should you go ahead and buy it? If you were an A to B equals CD aficionado, is that what we should say to James? Heavens to Betsy, no way. Why would we say no way? Well, number one, in essence, you say it came off the C point either Friday or today. I'm going with basically today. Gaps down, widest ranging bar. It's got some pretty decent volume behind it. Is that where price is going to stop? I don't think so. It's typically not how A to B equals CD patterns form. What other advice would you and I give to James on this one and take a look at Intel? We'd say, wait for at least a bullish reversal candle to form. Can we provide James with any other price targets out here? Well, we can go look at the weekly time frame chart and say, we know why price sort of stopped it where it did. You had a brand new profile that formed today. And the bottom of that box is 52.70. But based on passing that swing point with volume, even though you've come into a level of support, okay, so it just rests here. But what happens if it busts through that support? Where do you look? Well, you probably look back to a couple different spots. I'd say April 2nd would be a decent spot, 47.29. I'd say another decent spot, maybe a more likely spot, could be February 5th. Anywhere from 42.04 to 47.26. So what I would say is, just hold on and be patient out here. If we look at Stevie's other charts for Intel, we're going to see the price is moving higher, doing less relative energy out there. We'll see it formed a TD combo count. That's number 13. As was making that high. It's got one of Stevie's favorite patterns. So price coming into support, okay. But if it busts through that support level, this says 48.85 is more likely the price target on Intel. So yeah, I would say, okay, you're looking to buy and you're looking to try and you just want to hold it through August. Well, wait until you see that next bottoming pattern form inside of Intel. I do not believe that it is today. However, it's easy for me to be wrong. But right now, based on what we know at 1:37 in the afternoon, we're saying, it's not ready to move to, it's not ready to be bought out there. Now, NVDA is the other ticker symbol. You take a look at this stock. This looks pretty unstoppable, doesn't it? That's what it looks like to me. Let's go see if we can find anything that says otherwise out here. The only thing that we can see, that's not the only thing, but one of the things that you and I can see is we can see that it was also moving higher, doing less relative energy just a couple of days ago, but we don't see any kind of bearish reversal candle out here. We do see it close below Stevie's red line at 265.62. But, for NVIDIA to pull back out here, I'm not saying buy it. In order for you looking to buy a pullback, you got to see first, can NVIDIA get back on a daily basis inside its profile, its TAS market profile at 260.62 out there. Right now, that is the target to the downside. That's it. That's all we've got as we speak right now. Making higher highs, doing less relative energy, that alone is not a sell signal. You need a few other things to go along with it. So watch the 260.62, but spend more time on your vacation. Check back in with us when you get back from that R&R. This is Steve Rhodes with TFNN.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we have a request that comes in from Lillian. Lillian wants to go take a look at IBM and just wants our thoughts on IBM. So let's go take a look at it. I haven't looked at IBM for quite some time. Let me just do this. Let me just start off. What did I do there? I hit the wrong button. Let me just take a look. Let me start by taking a look at the long-term time frame out here in the case of IBM. When I say long-term, I'm referring to just simply coming back to the monthly chart. So what we know is that the most recent low on a monthly basis inside IBM, it was a retracement. So IBM bottoms, potentially bottoms, February 1st, 2016. I say potentially. Let's see if there was any pattern on a monthly chart that was going on back then. Just out of curiosity, let's do the. We see the topping pattern, the bottoming pattern. Do we see any of our traditional type signals out here? We've got the A to B equals CD pattern is what we have. What do I mean by that? Well, if we take a look at starting from the high on a monthly base, looks like March in 2013, that becomes our A point. Our B point is 172.57, 172.73, 172.19. Looks like February 2014 makes a retracement. We can see that it made about a 1 to 2 A to B equals CD. 1.618, 1 to 2 A to B equals CD long term. So if you own the art of timing to trade, you know there's a page in there that talks about you do a 1 to 2. That means twice the size of your A to B on that C to D leg. Yeah, typically the market is going to do something else. It's exhausted. Well, you had that bullish reversal signal, and then on the following month, that bullish reversal coming in February, that was in 2016. Price gets above Stevie's red line. On a monthly basis, Lillian, here's what you're looking at, what you don't like, what you do like. Price oscillator is still below zero. This will perform better if you are inside IBM. I suspect that you are based on the email. What you're really looking for here is we take a look at the monthly chart for IBM. You can see when it was moving higher back in the 2008 time frame, all the way up to that high where it finally just simply gave it up with Stevie's favorite topping pattern out here in March of 2013. You really want that price oscillator above zero. You'd like to see it rising, okay, which it's doing when it's above Stevie's red line and it's above zero. Bullish. You start falling and you are below Stevie's red line, tells you retracement, doesn't necessarily tell you where. That's where we have to go use different tools to try to identify. So makes a 1 to 2 A to B equals CD, then makes a nice move. By the way, that was a Gartley buy pattern. All Gartley patterns have 5 different outcomes. Looked like this attained outcome number 2, about a 0.618 retracement of that. And now it has fallen back and price on a monthly basis below Stevie's red line, 148.54. It's also below the bottom of a monthly profile. So those are two strikes against you. Not necessarily good out here with regard to IBM. Now what we have to see is this kind of like a just consolidating now. You want to see that price start to get above zero. That's the first thing. So here we come back and take a look at what was going on the week of or the month of August 2017. 80 million shares were traded August 2017. Last month, 88 million shares out there. So trying to bust through it with volume, it didn't do it. This month, we're at 45 million shares. We're June, what, the 18th? June 18th out here. So, ideally, I'd like to at least see this finish out the month with less than 80 million shares. And then you'd really like to see it close over 145.67. What if it doesn't? Then the work to the downside may not be over. Again, that's the longer term picture out here so far for IBM. The weekly picture, let's go see what the weekly picture looks like out here. And on the weekly picture, back at the ranch, back at that volume, key reversal session on a weekly basis, August 2017, 16 million shares. So as price came down here, too much volume, April 30th, week of, 23 million shares. Next time, 20 million shares. Again, all that's going against 16. This last week, and you're still kind of trading. Last week, was it a rejection? 21 against now. You're still looking for lighter volume. Now, the good news, it is some summertime, and maybe you're going to get that light volume. Maybe you're going to get it this week. You do have a bullish structured box. It does say, Lillian, that 142.11 should be support. It's been tested, in essence, over the past couple of weeks out here, the last month to be exact, and would say, hey, maybe this moves up to 150.95 at the top of the weekly profile. You really want to see it close above that. Now we come back to the ranch, and that is the ranch dressing. We take a look at the daily time frame chart out here. And here you had a nice little hammer candle back on May the 3rd. That's good. 5 million shares was tested with 4.5 million shares on a daily basis. That's good. Now you're pulling back. You're below a daily profile. Now what you'd like to see out here is, I suppose, perhaps, one of two things. Maybe you have your second higher low out here. Maybe ideally, price comes back and tests 142.89 and does with less than 4.5 million shares and begins to move higher out here. Regardless, what you can see when we take a look at the daily time frame chart for IBM is we can see where you're going to run into the next level of resistance, assuming that this can move higher. And that's going to be where it gapped down on April 18th. That's at 152.63. So in summer, Lillian, IBM may have bottomed, but it's really struggling to get people, shareholders, to buy into it at this stage. There's still a lot of people selling, as we saw by taking a look at the weekly and the monthly time frame charts out here. So hopefully that analysis helps you out. We have a question, or we have a request. This is kind of like a question. To go take a look at the, what are we looking at here? We're looking at soybeans for October, I believe. Let's go take a look at soybeans out here. Let me get to this chart. So let's go take a look at soybeans, and the question is it a nice butterfly on the hourly time frame chart? So if we go take a look at the time frame, this hourly time frame chart out here, that's what we've got up on our screen right now. And even if it is a butterfly, you can see that price is still trading below the bottom of its daily profile out there. That's at 932 1/3 out here. So butterfly on an hourly basis. So I'm not sure what the swing points are that you are looking at on an hourly basis for the butterfly. Butterfly, first, let's go take a look at the expansion. In the butterfly pattern, you're going to have an expansion of 2 swing points. Those swing points, you'll see which ones I would use out here. And I would use this low from about 8 o'clock on June 15th So I'd go from there and I'd go to the high. That was a kind of maybe a knee-jerk reaction on the next hour at 9:30. And so the 1.272 expansion would get you down to about the 920 level out there. So that'd be the first thing. The A to B equals CD that I would be looking at in essence here would give us a to B equals CD price projection. Guess I'd have to use this one. That says the 1-to-1 is down even a tad lower at about the 917-ish type level. And so this is really kind of the past 2 days out there on my work. That's looking at the hourly time frame chart. This is Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So we had a caller that had called in, Victor from Paramus, New Jersey. Wanted to know where we thought AT&T, ticker symbol T, was headed to. So let's go take a look at AT&T. And Victor, I'm going to take a look at the weekly time frame chart for you. And the reason is because it has the most potential for trying to identify a bottom. What I mean by that is if we take a look at this chart here, we can see price has been moving lower. What was moving lower, doing less relative energy, was a TD9 setup. That was on May the 11th. Oftentimes, that's where you see a reversal. In fortune, price moved the other way. We did see that, and it also formed a hammer candle. So we know that if you close below the low of a hammer candle, that's the beauty of it. The rhyme is, if you're long, you're wrong. Now price is pulling back into that hammer candle. It's already into it, that bar, the top of which was 32.31. You'll see a bullish structured weekly profile. Where's price headed to? It's either there right now or it's headed down a bit lower to 31.69. Likely 31.69 because it seems to be coming down, barreling down with volume. Already 49 million shares, and the weekly hammer candle at 154 million shares, and you're inside it. So price likely to head to the 31.69 level or to test the low of that hammer, which is 31.17. Out here. It's not a light volume pullback. Doesn't mean that the bulls won't hold up or won't be able to overtake the bears out here. There's a real test inside of AT&T as we speak right now. So, folks, thanks so much for joining me on your magnificent, marvelous Monday. It gets better than this, though, because following this show is your favorite polar bear, my favorite polar bear, Coca-Cola's favorite polar bear, David White. He's up next. After that, you've got Tom O'Brien from 3 to 5. I'll be back with Tom for a quick few minutes from at about 3:15. So tune in then. Thanks so much for joining us today. Stay tuned. David will be up in just a few minutes. Have a great Monday. We'll see you on Terrific Tuesday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.